journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, this was the NASDAQ yesterday right near the close. You'll see that the market went down and made a ABCD pattern right here, very right on the money pretty much. As you can see, the low was 2007. The ABC measured at 2,650, and you can see here there was your 382 retracement that was to come in today. And of course, the market was trading at 2104 on the close, so it was almost a sure bet it was going to go blasting through that. But I was watching this little puppy, and I'm going to bring it up here and to show you where we are right now, just as a matter of a few minutes ago. Here it is, the way it was just a few minutes ago. There was your 382 last night, and you can see now, folks, if we break below this, that means there's an A, B, C, D pattern in here somewhere, either way back here or right here. And if that's the case, that's going to take this thing down. Remember, folks, this is down $20,000 since it topped on December the 16th. Okay, so this is not acting very good. That's my 2 cents worth. Now, what we'll do here is we've got a request for a couple of things to look at. We'll get rid of this bond chart and get it out of the way. But first, what we want to do is to take a look at the Apple chart, because everybody got an email from someone back in the Far East, and they said it was impossible to lose money on Apple on a long-term basis. And I said, you're probably right, but we're just going to look at it anyway, just for kicks and giggles. And we'll see today. Oh, it's got this bad tick in here. Let me go to the half-hour, 4-hour chart. There we go. Here's our 4-hour chart on Apple. And this, I'm not saying, there was the ABCD pattern. It was supposed to be at 260. The high came in at 260.10, so it missed it by 67 cents. So we can't count that as a hit because it's off by 67 cents. And now we've come down, and today we made a 78% retracement of the low here, so it's holding okay. And we're still a little bit down on the day, but nothing really dramatic on it. As a matter of fact, if you look at this really closely, and I usually do, but I don't trade this kind of stuff, but you'll see here we have a potential ABCD pattern that told you the low was going to be down here at 229, and so far that has been the low. Now, also we need to look at Tesla. I'm looking at these stocks, folks, because they're in the news a lot, and I want to see how they're handling the news. I haven't looked at this myself today, so we're going to do it together. And hold on, there's Tesla. We'll get this up here on the daily, and we'll get here. It's probably up because this goes up every day. Well, today it has to be up because you can see it's just in the lower part of the range. That's really what you're looking at today. But let's take a look at it from the high that we made back here. I think our 382 was right up there at 418, and now we had a high today of 419, and right now it's at 406. This is not an ABCD pattern, but it could be evolving. Now I'm going to look at two others because we've had requests, and this first one, of course, is NVIDIA. This is the one that we were talking to this gentleman from Southern California a little while ago, and all I got to do is find it. It's under N. There's NVIDIA. We'll get it up here. He was selling it at 150, and now it's at 130. And here's where we were. If you can see here, there was the ABCD pattern right there, and that was a multiple ABCD pattern. If you can remember, let's clean that out. We can see it a lot clearer. That was the one we were saying it would go up and make a new high, and then since that time, there's a bad tick in here. God darn it. Well, I'm not going to change this. I'll tell you why, because I don't use these things. There's the one we were looking at right there. There was the number 250. Now we came down, and we didn't make a 382 here. We're trying to make a 382 today. Let's see how close we came, because that would be important that if we got there, let's see, the 382 would have come in at 230.8, and the high has only been 237, so it might have missed that. I don't know. But the NASDAQ is really weakening, folks, and that's been the leader the whole way. So that's why I'm watching these markets real closely, because I don't know if they're related to anything with the fire or anything like that. All I know is that the markets look bearish. It looked bearish before the fire, it looks bearish during the fire, and it looks bearish after the fire. That's all. That's basically all I can relate to you. I hope that makes some sense. Now, let's take a look at some of the things that we do know. First of all, we're going to get up here and take a look at the gold market this morning. Just get a second here. I'll get the this chart out of the way here. We had a really, those of you that like ABCD patterns in gold, we had a really nice ABCD pattern right here early this morning. Now remember, we've been bearish gold, but look at this. This was just an early morning chart. I'm going to blow it up because it was real easy to see. There's your AB leg right there, okay? There's your CD leg right there, and it rallied. You would have been a buyer around 274, rallied $16. There's your harmonic number, $18 right there, and now it's headed down. Now, remember now, we made a lower low, and then we've had a nice rally. So we want to see if that level just happened to be a 382 off of something. So we're going to go back and take a look. And I don't think we're even close. No, we're not even close to anything on a 382, because the 382 on that run here would have taken you all the way up to 2696, and this thing didn't get any higher than 2687. So there's no 382 or anything in here. All this was a minor ABCD from a scalp trade, and that's what we were really watching. Okay, all right, now let's get to the one that we still have a loss in, and that's in our corn. We're going to get up here, take a look at our March corn, see how we're doing. I checked a little while ago, hadn't killed us yet. Well, we got up to within 2 cents of our stop, and now we're almost even. We're almost back to even at 272. So we sold that, remember, on the daily chart right there at this level right here, and went a little bit above it. Now it's starting to move down. Now how much it's going to move down, I don't know, but anything at this point would be welcome. In fact, that if we don't take a loss, that would be welcome also. So those are some of the ones that we're paying close attention to. Now, I had another request to take a look at the currencies, and I will do that. I'm going to do the currencies one at a time, but the first one we'll do here to start out with, here is the dollar index, because we did spend some time on that over the weekend. Oh dear, I got to... hopefully, folks, the Telegram channel that I'm working on will be ready here in a week or two, but, you know, it's not an easy gig for me to do. I have to have somebody do it for me. Here's our dollar index that we were looking at, and we did get above that level that we were watching. There was that 1.618 expansion there, 109.74. Now, we backed off a little bit, but that back off a little bit means that the euro's had a little bit of a bounce and the British pound has had a little bit of a bounce. Whether this is significant or not, I don't know, but we came within. We were looking at 110.17, and we got to 110.02. Boy, that's pretty close. I mean, that's really close. But the rest of these markets, the pound is not, it's bouncing a little bit, but like one of those cats that's passed away. Hate to use that terminology. Anyway, that's what we're watching here with this dollar index. And also remember, we had another ABCD measuring on that dollar index at the same time. We covered. Shucks. Hold on just a minute here. Hold on. Just no matter what, folks, I can promise you this. I can't promise you where prices are going to be. All I can tell you is these puppies are going to get volatile. Volatile is the key word. We're going to be right back, and we're going to go through the pound and the euro and the Australian dollar. So we'll be right back.
This market has turned red, Tigers, and the question we should be asking ourselves is how to position for a potential bear market. Plenty of gains can be made in bull markets, but if we've entered bearish territory, that strategy needs to change. So, how do we pivot so we can see green in the red? Join Larry this month, January 10th and 24th, for live trading action. You'll sit next to Larry as he places live trades, explains his methodology, and answers questions live. Larry brings his decades of trading knowledge directly to you, teaching you how to navigate this shifting market. Go to the front page of TFNN.com today and secure your spot fast for live trading Fridays with Larry Pesavento. Happy New Year, Tigers. We'll see you January 10th and 24th. TFNN. educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Okay, folks, this is the euro, and if you notice here from the newsletter I had, below 102 is very bearish in my opinion, and of course we went below 102 by 26 pips, and now you can see we are now 89 pips above that, which is pretty close to $1,000. I did not do that trade, either long or short, but let's take a look at this on a smaller time scale, because we did make a slightly lower low on Monday. There's your slightly lower low down here. There's the key level at 102 is right there. Right there is where I'm looking at 102. And we went below it quickly, and then we backed off, and then it went up. Now, I'm not involved in this at all, but if I would have been involved, the first thing you want to look for is to watch for the first good. Now, remember, this is just a 13-minute chart, so you want to look for the first really good sell-off and see if it comes to the old, guess what, boys and girls, the old 382. So there's your low, there's your high, there's your 382 once, twice, 3 times, and then boom. Now, these moves are pretty good. That's a $500 move. And remember, you're only risking about $20, so it's 2.5 to 1. And just a second ago, now remember, this is a 13-minute chart. I'm watching it together with you. There was our last low right here. We backed off here for 1 hour. There's a 1 hour sell-off in the euro. Now, let's go back and try that same theory again. From your low up to your high, bada bing, bada boom. How are we doing now? How does this look? Is this hard to figure out, boys and girls? I don't know, but it certainly looks interesting anyway. A good way to look at this. Now, Stan Harley will be our guest in a little over 10 minutes, so let's bear with me and take a look here at the British pound, because that was the one I like the best. I still might like it, but I don't like it that much as of yet, but I'm getting closer. Here's the British pound. If you remember here, we had a really wonderful move on this to the tune of 17 handles in the British pound on the way down. And now, by golly, it's still not even back into the buy zone. Look at this. There it is. You see, there we were looking to buy it at 22.55. We had a 30 pip stop on that, and we got stopped out right on that low. Of course, it went lower. Now, if we look at this on this, you can see it's not rallying anywhere near like what the euro is. See, there's the British pound. See, it's not doing anything. It had a back off here to the 786 this morning if you were interested in something like that, but I don't see any. There was a nice 382 You see, it worked for about 50 pips, and then once you went back below it, that changed the trend to down, and then the rally up, all you're doing is just messing around in here. So this is not an easy one to trade. The break even on this, folks, is way up here. That was 122.55. That was the price on the weekly that we were wanting to buy it. Right there, 122.55. We get above there, it'll get my interest again. Now remember, we live in volatile times, so we know that we're going to see some real volatility here, and that's what we're really paying a really close attention to here this morning as we're going through looking at some of these. Now, we need to look at the Australian dollar because hopefully on Friday, Jim Bartleone of Barks Charts is going to come on because he is friendly to the Australian dollar. So we're going to get it up here on the weekly basis because you're going to have to see it. Oh, it's actually had an up day here, so that's a good sign for Bart. Here's where we are. I personally think, and I think we could get down to this level right in here. That's what I'm looking at. He thinks the bottom is right here. One of us is going to be right, one of us is going to be wrong. I don't know what it is, but anyway, see, we made a lower low. Let's look at it today. Take a 13-minute. You'll see we made a lower low than yesterday. That's what they said anyway. Let's look and make sure. Yep, there was our low on Monday. Okay, that was our Monday low. Now we had a nice run up. And really, how much does it move? 61.30. This has only moved about $700, so that's not really much going on right in here. I see one potential 382 that only worked for a heartbeat. If it did, no, it didn't even do that. There would have been your 382 right here. It didn't go below the 50. We were only talking about $100 here in difference, so you can't really do too much in that. This bottom would have been nice if we were watching it, and I wasn't. But if you like, the old ABCD that many of you do like, so let's just draw this in so we can see it the easy way. Hopefully we can do that. There's your A, B, C, D, and there was your bottom right there, pretty much exactly right on the bottom, and then it's had a pretty good run here. Currencies are really great to be trading, folks, for purposes of risk control and also profitability. They're all very, very good to look at. Now, let's take a look at another one that someone's asked about that I'm not involved in, and that is the live cattle market. And we want to look at cattle because I've been bearish this thing at the 198 level. Let's get that February cattle up, and we'll just put the hourly up so we can take a look at it to see if it's working yet. Well, it ain't worked. Yeah, well, it's working, but not very much. I mean, they're 198, and it's been there half a dozen times up here. You can see today's high was, what was that off? Looks like it was about a 786 off of the other high. No, 618. There was the high here at 198.90. And the rally up today went up to the 618, so nothing really happening here. I believe it's getting ready to back off a little bit. Folks, if you got eggs at $18 a dozen, they're going to have to eat some type of protein. Either it's going to be fish like tuna or beef or chicken, and the chickens are in trouble too because chickens lay the eggs and the chickens are dead, so chickens are going to get expensive too, folks. And yet they tell us that our inflation has dropped to 0.1%. And then the market rallied like crazy in the stock market. And then, of course, it's given some of it back, but not that much. Okay, folks, I think we've got 2 minutes to go. And a question has popped up about the soybean meal. And I remember we were watching this quite a bit. Here's our soybean meal. Folks, let me say something to you. When they feed chickens, the main thing they feed them is meal, okay? The reason why is because it's pure protein and they get the best quality eggs when you do that. Now, we've had a pretty big run here. It's about a $1,500 move in the thing. But when you stop and think that eggs are trading at $12 to $15 a dozen, meal should be way up here. Because when you feed a chicken an egg, a meal that comes out as an egg, and that's why it should be way up there. That's not acting the way that it should be. You see, it's only up a little. It's actually down a little bit today right now. So that in itself is a little bit troubling from the way I take a look at that. We've also been asked to take, well, I want to see it anyway, and that's the wheat market because I have a strong probability of wanting to buy some wheat, but they haven't given me that chance yet. I want to buy it way down here. I think we'll still get the chance. We'll put the weekly up here. Just be patient because we're not very far away. Look, this is a heartbeat from in wheat. You're talking 46 down to here. That's only about 60, 70 cents. We could easily get down to that area. I believe it's going to take out this triple bottom. Then we're going to be watching to buy it, somewhere around that area right here, around 492. See, 492 with a stop at 462 is what I'm looking at in the wheat on the longer term, because people are not going to stop eating cookies and bread. At least this old cowboy's not. That's not going to happen. Never hachi. Now, the silver market. That's been relatively bearish. Let's continue to see if the bearishness is continuing here. I saw an advertisement for 1 ounce of pure silver at $29 an ounce from one of those money exchange people, and that is under. I mean, at $29, considering making a coin like that, I mean, this is really cheap to buy it. I don't know I can't remember what it was. I almost bought some, but I said, well, better wait a little bit. Anyway, we're going to have Stan Harley coming up in just a minute, folks. So we'll be right back with Stan Harley and the Harley Stock Market Letter.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
We're back, folks, with Stan Harley, the Harley Stock Market Letter, the Fire Chief of Los Angeles County. Can you believe what's going on, partner?
Wow, Larry. Yeah, you and I used to live in that area. I lived
every day.
I lived in Ventura County, and you lived right over the county line on the LA side. What a mess. Pacific Palisades, 75% of the homes have been razed. That's just astonishing.
And those are not $30,000 tract homes either, my friend. You know that as well as I do. Those are expensive homes.
Yeah.
Let's talk about the markets. Make the people happy.
Absolutely. Well, just first of all, I just want you to know something. I love cookies and bread.
Yeah, well, cookies and bread, people are going to keep eating that. They did it $14 a bushel. You can't get them to buy it at $5 a bushel, but we'll find out what happens. So please continue with the stock market. They're yelling and screaming at me now to shut up. So please continue, Stan.
It's been my belief, as you know, we've talked about this on the air many, many times over many, many moons here, that the stock market is in the process of making what I call a major top. And I still believe that to be the case. Let's start off, let's look at the yearly data. Some of this is a recap from some of the things that we've talked about in the past, but there's some new viewers that perhaps may not have seen this before. Fortunately, I've got long-term data back to 1602, the very first day of trading in Amsterdam, the Netherlands. It's a synthesized data plot I've got it for both the Dow Industrials and the S&P 500, which combines the Dutch market, the British market, and the American market. And so what you see here is that synthesis converted into log format, base 10 log format, and several things stand out. Right away, one can see there were significant highs in Amsterdam in 1649, in London in 1720, 1835, in New York in 1929. And then what this overlay is on top of the price chart, this is the Foundation for the Study of Cycles Analyzer program. And what it does, I think, the best job on planet Earth in analyzing a series of data and extracting the cycles from that data and rank ordering them. And so what it has determined is the number one cycle, and I put a red box around it, and you can see the number one over here, is 93 years. I've shown this in the past. Last year, it computed 92 years. But now with the addition of 2025, it moves a little bit closer to 94, which is Lucas 47 times 2, which is what I think the cycle really and truly is. But nevertheless, the program says the dominant cycle is 93 years. And as you can see, we're there. We're there.
Yeah, sure are.
Let's drill this down. Let's look at the monthly data. I've done the same thing with the cycles program. I inputted the monthly data for the Dow Industrials when we were on the air last time. I had the data through the end of 2024. I now have the first few days of January 2025, inputted it, and it still gives the same result. The dominant cycle is 41 months, big number one here. And this cycle, Larry, was first discovered by Edward R. Dewey in 1941. And here we are, 2025. It was the dominant cycle then. It's the dominant cycle today. Still is. And as you can see, we're right there in a topping zone.
Wow.
This is a monthly chart from stockcharts.com. And what I have observed is the major pivots can be from high to high, low to low, can all be defined by the Lucas series of numbers. So what I've done here is I put a table in the upper left, and I ran this chart off about an hour ago. And I've defined the time points, as you can see, from these major pivot points, for example, between the September 1929 top and the January 1973 top, a major peak, as you recall 50 years ago. That was just 1 month shy of being a Lucas 521 months. Indeed, all of the pivotal highs on the monthly chart come out to be either a Lucas number or a Lucas number multiplied by 2. And I've shown that here in the table in the upper left. And we were right at within 1 month shy of Lucas 18 times 2, which is 36. 36 months from the January 2022 high into the December 2024 high was essentially 36 months. Lucas 18 times 2. This chart I've shown in the past as well, but I'll go over it again. For the last 50 years, all of the major highs, every single one of them, can be defined by a cycle spanning about 150 months. And as you can see, springing forth from the low in December 1974, the low point in the Dow, 150 months later to find the August 1987 high, 150 months later to find the high in early 2000. And then from that point, there were Fibonacci perturbations of 0.618, 1.236, 1.618, and so forth. Every single high of import, all of them, can be defined by the major Fibonacci series. And the 4.00 iteration of that 150-month cycle came out to be, based on my regression analysis, I was forecasting a high in the December 2024 time period, and the standard deviation on that was an incredible under 1 month, 0.977 months, over a span of 50 years. That's just astounding. I did this analysis a year and a half ago. And we know when the high occurred. It occurred on December the 4th. Let's drill this down. Let's look at the weekly data. This is the S&P 500. This is arithmetic, not log. And something very similar as with the monthly chart, all of the highs springing forth from the crash low of 1987, every single one can be defined by a Lucas number multiplied by 2. So the time period between the March 2000 high and the October 2007 high was within 4 weeks of being exactly Lucas 199 times 2. And as you can see, every single high lined up with Lucas numbers times 2. And the most recent high that we saw in the S&P on December the 6th was exactly 152 weeks from the 2022 high. And look at this, Lucas 76 times 2, 152, not even off by 1 month.
Wow.
This is, I ran this off just about an hour ago. What I've done here is I do what is called a computation of price velocity. It's some people call rate of change, some people call momentum. I'm trained as an aerospace engineer, so I do not like the term momentum. Momentum is mass times velocity in physics and engineering. But some amateur technicians often use that term.
And we're going to take a break, Stan. We'll pay a few bills. We'll be right back with Stan Harley, the Harley Stock Market Letter. Stay tuned.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, back, folks, with Stan Harley, the Harley Stock Market Letter. Please continue, my friend.
You and I have something in common, Larry.
Good looks.
Both like, yeah. we like cookies and bread.
You got it. Just take a picture of me and you can understand that. That's for sure.
Oh, I heard Jamie Dimon over on 60 Minutes. He says, I like to work hard and play hard. In fact, I like to work real hard through about 4:30 p.m. on Friday, and then I like to go home and have a martini.
Good for him. I had dinner with him 30 years ago in Mexico City with Mark Douglas, and he's a really nice young man. Well, we were the same. He was a little younger than me, quite a bit younger than me. But he was a really nice fellow. He was just an executive vice president at the time, but he was very funny, very amicable. We had no idea he was going to be the best banker in the world, but he was a really nice guy, and that was 30-some years ago.
I never met him, but he sure seems like he's got his hand on the pulse. I always listen to what he has to say. Larry, this is a chart we were starting to say before starting to discuss before the break of what I call price velocity. It measures rate of change on the weekly chart of the S&P 500. And a couple of things of interest here. One can see that as the market has pushed higher from the lows that we had in October of 2023, we got 3 pulses to the upside, 1, 2, and 3. And this top right here happened to coincide with the December 6th, 2024 high, but notice the developing divergence. As price pushed higher, we had progressively lower and lower peaks. Classic divergence. And then look at the dots now. They are pointed southbound. Southbound. What does that tell you? Well, I think it tells us a lot.
Yeah, me too.
Let's look at the daily data. You had me on the air about 6 weeks ago, and on December the 4th, we went through the charts. I said, Larry, I'm going to go out on a limb here. Today, I think is the top. And you said, hold the door, Sarah. Stan's calling the top.
She left me that day, Stan. She's never come back. No, I'm just teasing.
By the way, I've met lovely Sarah. I've had dinner with Larry and Sarah. They are delightful. But all seriousness aside, that day was the top of the Dow Industrials, and the S&P topped 2 days later. We actually had a rolling top among what I call the big 5 components. In late November, we saw the New York Composite and the New York Advanced Decline Line peak out on November 29th. On December the 4th, we saw the Dow Industrials make their all-time high. December the 6th, the S&P 500 topped out. And last but not least, the NASDAQ Composite saw its high on December 16. And then the transports, they made a secondary high in late November as well. Their all-time high actually was back in 2021. Point being is we had spread across about 6 weeks. We had each of the components among what I call the Big Five grouping see their major peaks, and now I believe they're all in the rearview mirror. Incidentally, the ACWX, I didn't bring a chart today, but the All Country World Index, which tracks all Western stock markets, excluding U.S., topped out on September 27 last year and has since been heading lower. So divergences are just all over the map. And methinks we've seen a high in the rearview mirror. Here's what the Dow looks like.
Yeah.
Here's what it looks like right now. And you have to agree. Interesting pattern developing. All tops are different the way they form. They're never always the same. For folks looking for this thing to just immediately fall off the cliff, I think they're going to be a little disappointed. Recall 2015. We made a high in May of that year. We chopped sideways for 2 months, and then we rolled over and head south. What the market has been doing by essentially all the benchmark averages, it drops sharply for several days, finds a lower level shelf of support. Then there's a counter trend rally that lasts a few days, and then we plunk down again, counter trend rally for a few days, plunk down again, and we're doing that right now. We saw a plunk down yesterday. We're doing a little sideways chop with very, very modest upward bias, which I think will last for a short spell. And then I think we will again break to the downside with lower lows yet to come. We've got a little time here before the music plays again.
Yeah, we sure do. Yeah. What do you have as some key dates coming up, Stan? Do you have anything looking at your Lucas numbers?
Well, I want to intentionally refrain from putting out any low points right now. Need to see the structure develop, although I feel strongly we're heading south, but I want to be a little cautious on putting out any low dates for the moment. Okay. Let's see this thing evolve a little bit more. I think the trend is southbound. Investors have
the S&P's 200 handles lower than when you called the top, so that's still pretty good. It's it's jumping around quite a bit, but 200 handles is not a small amount, so it certainly looks bearish no matter how you look at these things. That's just what's really surprising. And not only that, but you get really good news, and the market sometimes doesn't react to it like it did early this morning and then last Friday. So that's another sign that just some short-term trading that, why aren't the good news, coming. Of course, it's coming back today pretty good from the fact that we have no inflation. Stan, my daughter in San Luis Obispo paid $18 for eggs at Costco this morning. She called me and asked me what was going on, and you can only get one dozen. They limit it. Here in Tucson, they're $8 a dozen. You can buy 2 dozen, but no more, and that's related to those egg farms up there in Moore Park where Goldman City was, stuff. They've been destroyed, so there's no eggs coming into LA or California for quite a while because you don't get a chicken overnight. They have to be bred and fed and all that other stuff. So there's going to be some real food supplies that are going to be shaken a little bit because of this fire too that haven't become available to the public yet, but we'll find out soon enough, I suppose.
$18? Oh my gosh.
Yeah. San Luis Obispo eggs for $18 at Costco. Yep. She found some at $9.99 at Trader Joe's, but there was just one carton left, and some lady picked it up before she got it, so she ends up with a dozen eggs. Of course, I don't know how many eggs she eats. I eat eggs all the time. I eat eggs every day because I love hard-boiled eggs, and I like to eat those. I eat an egg a day easy, so guess I'll be going back to tuna again, but tuna is going to be expensive too. Because that's also one of the feeds that they use, for chicken. But they don't use chicken feed meal for fish meal anymore because years ago you got used to eating eggs because they tasted a little fishy because of the fish meal, but people didn't like that, so they don't even feed fish meal to chickens. They haven't for the last 35 or 40 years. They use regular soybean meal and corn meal. For those of you that are chicken aficionados. So chicken's going to get higher too, and beef is almost $2 a pound for just hamburger. So I don't know what that inflation thing said, but they weren't looking at the supermarket stuff. That's for sure. It's not any cheaper in the supermarket. That's I don't think there's any question about that. Well, I wasted a bunch of time. Thanks for joining us, buddy. We'll have you on in a couple weeks, okay? Thanks, Dan.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, here's the NASDAQ. There was yesterday's low. There was today's low right at the 786. There's the 382. It looks like it's going to make an ABCD to the upside. We've had a short position on here in the Russell, and I said in the newsletter, let's just get up here, or excuse me, in the video that I sent out last night, I said, watch the Russell. I said, because if it gets above this level right here, we're going to have to take our profits. We sold it at right here at 23.12. If we get out here at 52, that's going to be 60 handles or $3,000. I know that's a long way from $6,000, but I don't know where it's going to go from here. And the fact that it's come back here so strong, I would rather have a stop in there and then look at it again. All I'm going to do here, folks, and I'll tell you right now so you can see what I'm planning on doing in the next newsletter, and we'll get this up here as soon as I get that Telegram channel, I'll be able to do this a little better. And here's what we've done so far. This was a big sell-off that happened. This is an hourly chart now. Blow this up. I got to go quickly because there's a very little time. You'll see the pullback that we had here went just a little below the 50%. Now we're hitting. That means we're most probably, and this is a bear market rally is all this is, folks. We want to look to get short this thing up again here at 2282 probably tomorrow. And then looking at this, on that 4-hour chart, 2282 is going to be right there. There's your 786. So you can see that what I'm watching is for it to get right up here again. So take a profit. We'll get back in again, but nothing is bullish about this, folks. This is nothing more. If you think this is a bull market here, I want to have my hats off to you. Anyway, live every day in an attitude of gratitude, and may God bless. We'll see you on the flip side tomorrow. And 29 degrees here this morning in Tucson. High will only be 60, but boy, it is cold. So we'll see you on the flip side tomorrow, folks, and stay tuned. We're going to have next week on the 22nd, Jeff Hughes from Alpha Insights will be our guest, and we're supposed to have Jim Bartolioni on Friday. So we'll see you then.